Starbucks coffee are probably the best. Actually, I want to kind of slack and not upload videos this week because next week will be our final exam, and then I had not been studying for a long time and I want to cram anything. This video I'm super excited about, and a lot of you guys DM me asking me how I started to invest during my high school year and how to even start all these weird things, you know. So how do you even start to invest? So this kind of set of recommendations is basically based on my own experience. So if you people feel like some of those are really a little bit redundant, you can definitely take that out. So the first suggestion I have is to start by reading the best people's book. What do I mean by the best people? Definitely the people that are the most outstanding, like Warren Buffett. Shout out to Warren Buffett, Grandpa, I love you. Philip Fisher, Benjamin Graham, Peter Lynch, Bill Ackman, you name it. There are a lot of people who are really good at investment and they are publishing a ton of books. And you can basically grab an idea of their philosophy after reading, I don't know, maybe 3 to 5 books. And you can try like a few people and to see like what is your favorite strategy. What do I mean by favorite strategy? This comes to my second suggestion, which is pick your favorite strategy. So you really need to consider, like, what do you need to consider? You really need to consider about your preferences for risks and time. Like if you really prefer like a risky thing, maybe you want to be a little bit like, you know, technical investor where you look at kind of like the daily or monthly or weekly ratios or the trend shown in kind of like diagrams or things like that. You probably would prefer value investment a little bit more. Your basically preference for risk is really low. Then you actually want to pick up some stock that is so much cheaper than the actual value. So like price is really lower than the values, and you want to do something like that. And your understanding of time is that time is, you know, endurable, and you are willing to sacrifice your time and your patience for like a higher return of investment. So you really need to like understand your own preferences at the time you are reading those great people's book. And the third suggestion I have is to definitely try before you actually do it. So what I mean is that you can either do this by first, you know, compete in stock simulation. There are a lot of opportunities. I know that in China we have SIC competition. I have this called SPCT. I don't really know whether there are people from China who are watching this, but if you have in mind, there's actually a lot of investment competition in China where you can try to search for it. So SKT offered a lot of those things. You can kind of look about it. And on the international level, I know that Wharton has a annual competition on investment where you guys can also check it out. It was super competitive and super hard, but you guys can definitely check it. It would be a lot of fun to participate. And the second thing you can do is just to analyze things by yourself. I remember the first time I actually looked into a stock called McDonald's. I just jot down each number one by one from the website, and I tried to like get the ratios that I learned from the books. Like I just calculated it one by one because somebody told me to do that. I think it's one of the master of investment, but I kind of do not remember who that is, but it's just trying. You just like try to like see the numbers and try to understand like, okay, so this ratio just decreased and what does that mean? You kind of just like gradually try to get a sense of what you're doing and what are the numbers and what do they really mean. I want to suggest you guys a few tools that I found that are super useful for analyzing my stock. So the first one is definitely official site of the company. If their stocks are actually on the stock market, you can see their reports on your official site. So if you just go to the official site of that company and then try to find a line called investor relations and click that, and you can see definitely every single annual report of that company or even like extra information about those companies. That would be super useful. So that's definitely the first thing I would recommend you guys to check. And the second tools are basically like the general ones, maybe Google Finance, Seeking Alpha, and there are also like a lot of similar things. And basically go there just to see like numbers if you want to check it out. And there will also be like kind of like the diagrams where I believe technical investor will need to use. And also you can check about like how other people feel about the stocks, because different people have different opinions and they have different philosophies. Even though you not necessarily will agree with them, checking their ideas and see how the market are perceiving this stock would definitely be a really useful strategy. And the last comes to my own strategy for picking a stock. That would be one of the most interesting one, because a lot of people would disagree with me, but that's basically like how I do it. So another time, take it as a grain of salt, and if you really like that, maybe you can try it. So the first thing I do is basically only pick the industry that I really know well. So I'm a student. I do believe that I know nothing about semiconductors. I know nothing about chemistry. So I'm definitely not touching those kind of stocks, because if you don't understand a stock, how can you believe in it and like invest your money in it? So what I basically do, like I only look at industry or sectors like retail, because that's like something that is like the closest to me and I know it the best. And the second strategy I have is to suggest that start by looking at the mode type. So I said that in this video that mode type is something that is like a really superior feature or technique or patent that a company owns that can help it to stand out in the whole industry, or to win a greater percentage of the customers. That's really important, because there are a lot of things you cannot predict, like in the future, what will be the market be like, what will the customers be like, or what like if there will be any catastrophic events going on that will hurt the overall industry. What you can only know is that like how well this company play in the overall industry, and if actually it can pertain a rather leading role in the industry. That would be really good, because whatever happened, it will still be like winning and doing relatively well. Not necessarily only like big companies would have a mode type. Like for the companies that I mentioned, Stitch Fix, it is a really small and even like really early company, but their algorithm and their personalized style of clothing. I actually look into a lot of comparisons between Stitch Fix and other stores doing similar things, or even Amazon's who was doing personalized clothing in the current years. And from those data and evidence that I gathered, Stitch Fix was pretty good at its algorithm. So it was kind of like a mode type in its own industry, and that's definitely a thing that we want to be looking for. And the third suggestion I have is to look at the overall operation, basically the current ability and its ability to play against risk. So basically first, its own operation, its liquidity, profitability, all that good stuff. You can know like what kind of ratios you need to look at when you're actually testing those things, and also the risks that it can kind of like play against when there will be catastrophic events in the future. So basically this part is pretty interesting. You will need to look at like all the worst thing that could possibly happen to them in the future. So there would be like the risk section in financial statement, and also there will be a lot of analysis online where you can just try to find like what are the things that might happen to this company and what are their abilities to play against those risks. They pass those two parts and you think that this company would really do well, and in the future or currently you can move to kind of the last step, which is evaluation and waiting of time. So what do I mean by evaluation? There are different types of strategy of evaluating a company, but basically it was just like try to get a price, your actual expected price of the company, and what is its actual current price. And in value investment, I believe that what we think is if the current price is actually 30% lower than your expected price, you can basically buy in, but I would really play it a little safer. I would do maybe like 50% lower than that. And yeah, the valuation of price and value. And the other thing is definitely the time. This is basically like one of the most important thing I can say in this video, because I think it was like one of the weakest point about value investment is time. You guys know that during the COVID-19, my great grandpa Warren Buffett, he bought in some airline companies, and he bought it in the middle. So basically after he bought in, the price just went down and down, and nobody knows what's going on. And my grandpa, he was just, I think he was sad, but rip. the thing about value investment is that you basically buy in after the price is lower than the value, but there would be like external factors that would be pushing the stock price to go down, like market expectations, investors' psychology, something like that. So what I really like to do is, after I evaluate price and value, I would still be like looking at the overall trend of the market, whether they have a sort of expectation of the price, whether they have like a weighting signal, like what kind of signals the market is showing toward this toward this stock. If it was like maybe people should sell it, I would know that the price would keep going down. So I would keep waiting until there would be like less force to push down the stock's price. And you know, when the stock actually stabilized a little bit, I would start to consider about buying in the stock. And similarly, if the stock price is going up and I see a lot of signals of buying the stock, I would start to like think about it. You know, are people over evaluating these stocks? Is this overestimated? Should I sell? So you see my philosophy. When other people are selling, you're buying. When other people are buying, you're selling. And before I end this video, I want to tell you guys one of my most important strategy of investment, and I really hope that you guys can stay on to this point and learn this thing. Subscribe. I'll see you next time.